Hello and welcome to the Secret Property Club podcast. My name is David Oliveira. I am your host and I am very happy to have you here today. We will be discussing the basics, the fundamental way to make money through property investing, which is obviously a buy-to-let property. You might be new to this and you might be just curious about how to get started. And if that's the case, you are in the right place because I'm going to give you a step-by-step guide on what you need to do to get started in property. So let's start at the very beginning. What exactly is a buy-to-let? In its simplest form, is basically purchasing a property and renting it out to tenants. You acquire an asset and it generates income. It's just that. This is the core principle that millions of property investors use to start their journey. Now, as we progress to other episodes, we will discuss more advanced techniques, such as BRRR, which is a strategy where you buy, refurbish, rent, and refinance a property. But for this first episode, we are going to stick to the basics. One of the first secrets to understand, especially when you start out, is the upfront cost of buying a property. Unlike residential mortgages, a buy-to-let typically requires a 25% deposit, which means on a £100,000 property, you need to put a deposit down of £25,000. But it doesn't stop there. You will also need to factor in stamp duty. It is very important to note that when you purchase a buy-to-let property, you are likely to have to pay an additional 5% stamp duty surcharge. However, stamp duty rates can change. So it is very, very important that you speak to a professional mortgage broker before you make a decision, before you buy a property. You also need to include solicitor fees, survey costs and potential mortgage broker fees. You should also think that the property might need some sort of refurb and those costs need to be factored in when you analyze a property deal. For £100,000 property, you are looking at maybe a £30,000 to get started, and this is a significant investment, so you should definitely speak to professionals that can help you. I am not a financial advisor. I can only speak from my experience in property. I started investing in property around 4 years ago. I'm now a portfolio landlord, so things are okay, but you should always speak to someone that has the experience to guide you. Now let's talk about mortgages. In the buy-to-let world, interest-only mortgages are often preferred. With interest only, you pay only the interest each month, which helps you maximize your cash flow. This is very important to make sure that the property generates enough income to cover all of the expenses and provide a profit. Remember, we are building assets here, we're not creating liabilities. So understanding the difference between good and bad debt is really important. This is basic, but it's fundamental information. Now let's talk about tax. No one wants to pay tax, so we need to learn how to be efficient. And with the UK's Section 24 tax changes, investors started to buy buy-to-let properties in a limited company, because this allows you to deduct the mortgage interest that you pay and other expenses, and then reduce your tax bill, basically. Always consult a tax advisor to understand the specific implications for your situation. Do not listen to advice that is generic to the public, because everyone's circumstances are different and you should get advice specific to your situation. If you are just starting in property, I would say that you should definitely focus on buy-to-lets, because that helps you build a solid foundation for your business. And when you buy a buy-to-let property, remember that location is key. Location. You don't want to buy a property in a rough area with a high crime rate. That's no good. You want to buy a property in areas with strong local economies, with good schools, with hospitals, with all the amenities that tenants will be looking for. And finally, you need to master your property analysis. There are many different tools, including spreadsheets and apps that can help you understand the numbers, the figures of a good property deal. Some of the key metrics that you should be looking at are ROCE, so return on capital employed, yield, ROI, which is return on investment, your monthly profit. You should prioritize your cash flow, because when you're starting out, you need to make sure that you are receiving enough income to cover all of your costs, and you should also allow to have some sort of fund for emergencies, for unexpected situations, because we don't want to, but things happen, and you can have a boiler breaking down, or you can have a tenant that stops paying the rent. There can be a leak at the property that kind of causes damage to the property. So these are all things to consider before you starting investing in property. It's not too risky, but you need to know what you are doing. And that concludes our beginner's blueprint to property investing through buy to let. Remember, the Secret Property Club is here to provide you with the essential knowledge and information and strategies to succeed in the world of property investing. Thank you for joining me on this first episode. And remember, for more information and resources, be sure to visit me at secretpropertyclub.com. Join me next time, because we are going to talk about more secrets to build your wealth.